Hi, thanks for joining the DiscoverYourLifeToday.com YouTube channel. My name is Maveen Kaura. I come to you today. I want to talk to you about how to determine the right credit product for yourself. If you enjoy this video, please remember to subscribe to the YouTube channel. You'll also be able to follow me at DiscoverYourLifeToday.com. You can also go to Instagram, Facebook, or Twitter, whichever one you prefer to use. You will find me on all three of those platforms. So today, let's get going. I want to talk to you about how to determine the right credit product for you. I actually have worked in the financial industry on and off over the last 20 years, so I do definitely come from quite a bit of experience. Have you been thinking about getting a new credit card product lately? You're not sure which one to get, no problem. Let me give you some insight based on that banking experience I do bring. When I was working at the bank, my day-to-day consisted of opening accounts for customers. Many times I would be able to answer questions about the credit products that we do offer to our customers. During my day, I would sit with teens, adults, and anyone looking for financial information. Most teens and older customers would tell me they did not learn anything about money, credit cards, or even interest in school. Kind of speaks to our education system and kind of what the importance is these days. One of my teen customers actually asked me about credit cards and why she would want to get one. I told her this was a great question, and it was not easy for me to answer, but I would try to look at how she used her current account to try to answer that for her. I brought, a couple examples across to her. As we chatted some more, I really wanted to explain her the difference between credit cards such as American Express, Visa, MasterCard. I wanted her to really understand what an overdraft was and how to use that, and also what a line of credit is, because during the banking experience, you will come across line of credit, and the banks will try to push these products on you. So these are the different things that I told her for each one of the different products. So number one, we reviewed the Visa and MasterCard product. This is pretty typical for someone to have. This is a product that's typically given to or received by people typically when they're about 18 to 22 years old. Most of this credit card or first time experience with a credit card will happen for most people when they go to university or to a college. I remember when I was in college myself, and I was able to also look at getting a credit card. I know they would have tables set up at the university, or in this case at the college I went to, and right in the main hall, people would be able to walk up, do the application right then and there, and within a couple of minutes the application would be filled out, and you'd have a credit card in the mail probably in a couple of days. I personally don't believe having a credit card is a bad thing at all, unless you just make your minimum monthly payments. This has to be, honest to God, one of the worst financial things that you can do for your future. The reason is, I'm going to kind of go through this in a little bit as well, but I want to let you know, as I chatted with my customer, I gave her explanations of how I've been using my credit card and taking advantage of the 21-day grace period that the credit card companies do give you when you do use your card. I do not use my debit card, and I do not make purchases with cash whenever possible. I not only use my card to collect points, but I also use it to build my credit over time. I took the time to explain to her how I use my credit card. I showed her how long it would take to pay off her credit card and her balance if she just paid the minimum monthly balance month after month after month. The credit cards typically carry a interest rate between 18 and 23%. Really not a very good idea to pay monthly payments, if you can help it, of 20% on an annual basis. If you only paid the monthly payments, which I mentioned to her, it would take her month after month of paying probably more than a couple of years of that credit card, and the credit companies are really creating income or for their balance sheets out of thin air because you are only paying your minimum payments. But if you utilize the 21-day grace period that the credit card companies allow you to have, then you do give yourself the advantage of being able to use free money. Now, the advantage of also using the 21-day grace period is the ability to pay off that credit card as quick as you want, but you do have that 21-day time to do so. If you don't do it, in the end, you'll actually turn around and end up paying thousands of dollars in interest to these companies that, as long as you make your minimum payment, they allow your credit to be fantastic. Once you start missing payments, even just your minimum payment, then you start feeling it on your credit score. Now, if you don't think you could stick to the plan of just making your minimum payments, then obviously a credit card is, making your full payments, then a credit card is probably not for you. I have seen it where lots of friends over time have gotten credit cards when they were younger, and because they did not have the knowledge of how to use a credit card, did find themselves in major credit card problems and even found themselves in bankruptcy over a period of time. The next product I wanted to explain was called the Overdraft. Now, this is a product that can be added to a credit checking account or a savings account, but most people will have this account directly on a checking account. It's kind of like having a credit card attached to your checking account whenever you need to use it. The nice feature of an overdraft is it helps many people use temporary credit. This credit product helps payments not go NSF or not go non-sufficient funds to a person's account. The reason this typically happens is typically people do not have enough money in their account to cover the payment that was going through. When this happens, the user can experience fees of $45 to $80 depending on what the company charges and the bank charges the customer. To me, it only makes sense to pay a couple of dollars to have the use of a temporary overdraft and not have the balance go into non-sufficient funds. It's better, obviously, to pay, let's say, a couple of bucks to have that payment go through. Even if it costs $5 a month or $10, in interest, which is only $15 as an example, it's still better than paying, between $45 and $80 in interest over a long period of time. Of course, if you keep your account overdrawn for a long period of time, the fees can add up. The advantage, of course, is having the ability to not go into the negative whenever possible. And if you do happen to use your overdraft, at least it will not negatively impact your credit score. I told my customer this would be the best use for her if she was needing money in between paychecks. Typically, this is what people do, but I do notice while I was working at the bank, of course, that a lot of people do live in their overdraft. Again, that just kind of shows you the ability that people are not really learning about money, how to control money and use money. It starts again at our education system. The biggest difference between an overdraft and a credit card is there is no 21-day grace period as a credit card would have. When you use your overdraft, you are paying the interest right away. The companies start making money on day one. So you have to understand this is also a high interest rate as well. It's about 20 to 21% as well, depending on the bank, of course, that you do business with. So instead of waiting a month to pay that interest, you would actually start paying that interest on day one. So the bank is allowing you to borrow money that doesn't exist because you are able to take cash, similar to if you were doing a cash advance on a credit card. The third thing I actually talked to her about was loans. A loan can be used to buy an automobile, consolidate, or even take advantage of home renovations. The amount of a loan people typically request was about $5,000 to $50,000. Anything over that, really, you'd be better off getting a line of credit, which we'll talk about in a few minutes. The loans are typically amortized over a certain period of time. Could be 3 years, 2 years, 1 year, 4 years, 5 years, up to even 7 years for automobiles. Most people really know about loans is when they first go buy a brand new vehicle and they finance it. They'll typically finance that vehicle for maybe 5 years or 7 years, depending on where they'd like their payments to be for that monthly payment. Now, because the customer will be paying back the loan over a set period of time, the interest that's earned by the bank is pretty much understood what it will be, unless you, the person who purchased the loan, pays that loan off quicker than it is set. Typically, loans are going to be between 8 4 and 8%. Now they can be higher depending on your credit rating. I have seen loans up to 13%, but again, that would just tell me the person's credit who was getting that loan was not necessarily in the best place or position for that loan. But of course, when you need to borrow money to pay certain higher debts off, like debts that are 22% off, it only sometimes does make sense to get a 13% loan to pay off a 20% loan. The other thing we talked about was a line of credit. Now, a line of credit is something that a lot of people came in to get. A lot of people would prefer to get a line of credit over a loan. Now, it is a lot harder to get a line of credit versus a loan, sometimes even a credit card. I find credit cards are so much easier to get than a line of credit. Most companies banks, I guess, do not really want to give out a line of credit because it is an unsecured product that the person has access to a bunch of money. It is a revolving credit, so you would pay it, you can use it, you pay it, you use it, similar to your credit card, but with a much, much, much lower interest rate. This is why the line of credit is a more complex product, and a lot more people would like to have a line of credit if possible. We talked about it being unsecure. It means the bank will lend you money, no strings attached, with the hopes that you'll pay that money back as a guarantee from yourself based on your credit and your credit rating. The amount of the unsecured loan can be, like I said, in between $5,000 and $50,000. But I have seen line of credits for businesses range, in the high 6, even 7 figures. Some of the marijuana companies these days that you would probably hear about in the Canada and U.S. have, multi-million dollar line of credits that are revolving that they can use anytime they need money for their business. Again, we're just kind of taking a look at personal, but that is also available for a lot of businesses. Line of credits typically are going to depend, again, upon the country you're in and how much they're going to charge you for the interest. But here in Canada, it's typically prime plus or prime minus. Typically, it's going to really depend upon your interest rate. Most people that I'd seen were between 2.5% to maybe even 4%, typically lower than what a loan would be. And that's why line of credits are so sought after, because most people would like to take advantage of the low interest rate and interest only payments versus having to pay back the principal of that loan as well. So reviewing everything we just talked about, I explained the benefits of each product. Hopefully, if you have any questions, absolutely leave me a comment in the comment section. I'll be happy to answer the question. And hopefully this gives you a reason to think about the advantage of getting a credit product and which one may make more sense for you. I've only ever used a credit card. I don't, like I said, use cash or debit unless I really, really need to, because again, there is a strategic reasoning behind it, which I'd love to explain. Anybody who wants to know, again, drop me a line. I'll leave a comment in the comment section. When you misuse your credit card, it can definitely end, or any credit product really end you up in major trouble. And that trouble can equal bankruptcy in the big picture. A simple misunderstanding, misuse, or even mispayment can create major problems for anybody's credit in the future. If you're going to pick a credit product, pick the right one based on what you're looking to do and accomplish with that product. If you plan to hold a balance, then make sure you're picking the right product based on the interest of holding that product. Like I said, it's easier to get a Visa, MasterCard, American Express, or any other credit card product versus a line of credit or even a loan. These products are typically a lot harder to get because you're paying back the bank at a much, much lower interest rate, so they make it even tougher. Where if you have a high interest, the banks really make more money on it. And I guess in the big picture, these companies, the banks and the credit card companies, really don't want you to pay anything but the minimum, because that's how they make all their money in fees. Lastly, you should never lend your credit card to anybody. You lend your credit card to somebody, you're trusting them to pay it back and pay back the money on your credit card. Same thing as a loan or a line of credit. You lend anybody money from that product, you're really putting your name on that anyway, saying, because if they don't pay it, you're still going to end up having to pay it. If you're not able to pay it, your credit is being affected, not theirs. And typically you're lending money to people whose credit has already been affected negatively. So you just kind of take yourself down that same path if you go ahead and lend people money based on that thought process. I believe, and I hope you as well, have gotten as much information and good knowledge as my customer did while that customer was sitting down with me for a 30-minute conversation as we went through everything. She did mention to me that everything I had told her she had never learned in school about why a credit card was a good or not, about different line of credits, different loans, or even overdraft and what those products do to help the customer based in different situation. My hope is the next time you are considering a credit card product, a line of credit and overdraft, you'll think about this conversation we're having here today, and you might think about what might make more sense for you to pick up for yourself. I want to thank you for checking out the Discover Your Life Today YouTube channel. I want to again tell you this is about how to determine the right credit product for you. This is just to really give you a good fundamental understanding of there are 4 good credit products available for you if you are looking for financial help. Of course, find the right credit product for yourself based on your needs, not just what you want. And don't look at getting all 4 of them because it can really put you in a major bind over a long period of time. Please, if you enjoyed this video, share it. Check out other videos that I've done as well on the financing side, on the sales side of things. Like the video, leave a comment below if you have any questions. And again, hope you have yourself a great day. And remember to tell everybody about Discover Your Life Today. Bye-bye.